Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish, and you can come here to get your questions answered about your home business taxes. All right. So the question of the week is, can I file my taxes with my last pay stub? And the answer is no. All right. Your last pay stub, it doesn't contain all of the information that is on your W-2. So it's against the IRS e-file rules. It specifically states that you can't use the pay stub because it doesn't have all of the information that you need. So now here we are, it's, the beginning of the year. The tax advertisements are out. There are people that are actually advertising, bring in your last pay stub. But here's the deal. When you do that, you're basically getting an estimate of what your tax outcome will be because you don't have all of the information. And so this is where those refund anticipation loans come in, right? Because right now, we're in a funky space. Let's be real. All right. With the government being shut down, no refunds get processed. Okay. And so now, even with that, and then the extended date of February 15th for those tax refunds not getting released, refund anticipation loans are really being promoted because they're appealing to you getting your money now. Okay. They're appealing to your impatience. There are some times that people really do need that money. Okay. And again, I'm not hating on the service. I'm all about you making an educated decision. Okay. So when you're filing with your last pay stub, you're getting an estimate. So somebody is really doing an estimate on your taxes. They're basically doing a workup for you that's going to change based on what your W-2 says. Okay. So when you get a refund anticipation loan based on your last pay stub, if your W-2 has something different, and then you may not get as much back as you expect, you are still on the hook for the entire amount of that loan. So you need to understand that a refund anticipation loan is just that. It is a loan against your tax refund. So when that tax refund finally does come back, if it does not cover all of that loan, you are responsible for paying that back. So this is why you need to understand that when you are taking your last pay stub in, nobody is actually filing your taxes. It might be some kind of estimate, but you cannot legally file without your W-2. Okay. So even though people might be processing your return, you're not actually filing your return. Usually the IRS doesn't even start accepting returns until like the last week of January is generally when they open. There are some places that get what's called pre-acknowledgement, something or other. I forgot the exact name of it, that their returns get accepted sooner. But by and large, everybody, gets their returns accepted generally around the last week of January. The IRS, as far as I know, has not published the exact open date for receiving and actually processing those returns. Okay. So just know that it is, number one, it is against the rules to file your taxes with your last pay stub. When you do that, though, when you go to places that are advertising, bring in your last pay stub, it is only an estimate. It is not the actual amount that you receive. Now, and based on your W-2, that information could change. And so if you got a refund anticipation loan based on that estimate, and let's say something happens and you don't get as much money back in your refund as you expect, then you've got to make up that difference. The other thing that I want to caution you against also is, getting caught up in the dollar signs, because we all know with the earned income tax credit, that is the largest paying tax credit in our government system. Okay. And when it was created, it was meant to help families stay out of poverty. That was the original intent of the earned income tax credit. It was actually called the poverty tax credit, but they changed the name. Okay. I guess to make it more palatable. But anyway, but what happens is, with the earned income tax credit, it's, you have 0 children, 1 child, 2 children, 3 or more children. Okay. So people that have more than 3 kids have been known to rent out Social Security numbers to other people who may not have children. Okay, I'm going to again highly caution you against doing that, simply because of the fact that it's easier for you to get caught now, because there are more government agencies that are talking to each other, and it's going to be easier with automation to catch you when you do these things. Okay, and so what happens is, if you get busted, number one, you can be banned from claiming the earned income tax credit at all for a decade, okay, for 10 years. And then if they show that you have willfully done this over and over again, they can ban you and whoever else you're in cahoots with from claiming the earned income tax credit forever. Okay, so if the earned income tax credit is something that your family depends on, I'm really going to caution you against doing something foolish like that, because when you get caught, you can't pay the price. Because the price of getting caught is paying back money that you should not have received. And, and this is where the IRS is being directed to audit more of the earned income tax credit returns, because they want to cut down on fraud and it's easier to catch. That kid either lives with you or they don't, period. And so when they start cross-matching these records to say, hey, you claim this kid doesn't live with you, we want our money back. And then what happens, and this is what starts the perfect storm, okay? Because a lot of times when you're dealing with the IRS, if you're getting the earned income tax credit, 9 times out of 10, you can't afford representation. So then you are pretty much at the mercy of the IRS if you don't know what to do. And then and I've seen it where people get upset going to someone, to whether it's an attorney or it's to an enrolled agent or a CPA, looking for representation for free, and it's not happening. So don't get upset when you get caught doing these things and then you need someone to help you and you can't afford it. That's pretty much how it works out. And then you have to pay back that money that you don't have. So I know we talked about more than just that last pay stub, but I really want to paint the big picture for you, okay? It's not just the last pay stub. It's a big ball of wax, okay? And so you need to know how this all works out, and it generally doesn't work out very well, okay? So last pay stub, absolutely cannot file. If you go somewhere with your last pay stub, it is merely an estimate. And if you get a refund anticipation loan, it is based on that estimate, but your return will not be filed until you actually receive your W-2 and the IRS opens for business. Okay? So that's it for today, you guys. I really hope that helps you out and how this whole thing works. But it's tax season, and listen, don't wait till the last minute to file. For my home business owners, listen, you should be ready to file your taxes in February, so that if you do owe and you don't have the money available, you got a little bit of time, okay? But you need to go ahead and file, all right? Owing the IRS is not bad. You have to really, just, go ahead and get her done. And then if you have a tax liability, you have time to put some money together. But it will also tell you that, hey, you need to start setting aside money for your taxes. All right. So I hope that helps you out. Okay. Thank you guys so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come here to get your questions answered about your home business taxes. All right. Have a great day. See y'all next time. Bye.